Hello guys, I hope you are doing good. This video is a review cum summary of the book How to Make Money Trading with Charts by Ashwani Gujral. At the outset, I would like to give you a disclaimer that I am not promoting any of services workshop provided by Ashwani Gujral. This video would be only the review cum summary of his book. In my previous video, I have reviewed his book How to Make Money Trading with Derivatives. I'll put the link in the description if you are interested. In this video, I'll give you a brief snapshot of the topics covered in this book, and at the end, I would share whether the book is worth the price. So stay tuned and watch this video till the end. Let's start. The book is divided into three parts. Basic information, that is equity, shares, futures, options and so on. Second is technical analysis, that is it includes trend lines, candlestick patterns, chart patterns, various indicators and so on. And the last part is money management strategies and mental makeup, covering traders' psychology and its impact on trading. The technical part is explained beautifully in layman's terms with extensive use of examples. There are so many charts for each concept, rendering it easy to understand and implement. Technical analysis or topics. ADX, Average Directional Index. ADX is having a separate chapter in the book covering all the nitty-gritties. It is used to identify whether the market is trending or trading and to estimate the strength of the trend in case of trending markets. Trendlines. Book gives step-by-step guide on how to draw trend lines and the do's and don'ts while drawing and interpreting the trend lines. Candlestick Patterns. The book explains various candlestick patterns and their interpretation. Patterns included are doji, hammer, hanging man, shooting star, engulfing patterns, dark cloud, morning star, evening star, harami, and so on. Chart patterns. Chart patterns are broadly divided into two parts, reversal patterns and continuation patterns. Book uses charts to explain this pattern along with the entry and exit plan. The reversal patterns covered in this book are head and shoulders, double top and bottom, triple top and bottom, rounding top and bottom. Chart patterns, the type of continuation patterns included in this book are flags, symmetrical ascending and descending triangles, gap, and so on. Next is volume and open interest. Volume is the number of shares or contracts traded in a security, while open interest is number of open contracts in the derivative instrument of the security. This part covers the interpretation and execution based on volume in different scenarios. Weasley, increasing volume and rising price, decreasing volume and rising price, average volume and rising price, increasing volume but falling price, decreasing or average volume and falling price, steady volume and steady price. Book discusses interpretation and traders' strategy in all the above scenarios. Indicators. As the name suggests, the indicator indicates the future price action in a strategy. This part of the book covers the momentum indicators along with the interpretation and guides us to trade based on them. Indicators covered are moving averages, both simple and exponential, MACDs, that is moving average convergence divergence, RSI, relative strength index, and stochastic oscillators. Next is money management. Technical analysis shows you how to identify both trends and reversal points. It's like teaching a batsman when to strike the ball. Money management, on the other hand, is all about taking runs and building an inning, where sometimes you have to take singles, sometimes you have to be aggressive and send the ball to the boundary, sometimes you have to duck to avoid a bouncer or leave a ball alone, or play a defensive shot to avoid losing your wicket. This chapter covers concepts like position sizing, that is how to decide the size of each trade. Concepts covered are risk-based sizing, value-based sizing, and so on. Pyramiding. Pyramiding means adding to position as the price moves in the desired direction. It is a method of increasing your position as it becomes profitable. Strategies covered are standard, inverted, and reflecting pyramid. Drawdowns. Drawdowns mean a reduction in the value of the trading capital. Let's understand the impact of drawdown on trading with examples. Suppose you lose 5% per trade for 5 trades and later win 5% per trade for 5 trades. The outcome would be as follows. If you have started with 10,000, you would have ended up with 9,876. Now let's reverse this scenario. Suppose you win 5% per trade for 5 trades and later lose 5% per trade for 5 trades. The outcome would be same. You would end up with 9,876. I believe the result would have surprised you. Here one of the important lessons to be learned is you should not increase your trading capital. In fact, you should regularly take out profits from trading account and avoid pumping them back. Next is the mind of a successful trader. Let me share the example of Vinod Kambli and Sachin Tendulkar. We have always wondered how two cricketers who have started out and played together ended up so differently. At the outset, many people believed that Vinod Kambli was in fact more talented than Sachin Tendulkar. Why then did Kambli fade away after a short career of nearly 5 years, while Tendulkar went on to play international cricket for an astonishing 25 years? To my mind, the key difference between them was mental strength. Kambli couldn't persist, while Tendulkar was both passionate about his game and well disciplined. The moral of the story is that the talent by itself can only get you so far. Determination, passion, discipline, and persistence are equally needed for enduring success. In this chapter, the book talks about human nature, mental blocks, and their direct impact on your trading career. Emotions. Emotions play a critical role in your trading journey. Some of the emotions that need to be overcome to trade well are euphoria. Euphoria is a state of mind in which we start to believe that nothing can go wrong. It leads to traders into making careless mistakes and not to be careful with their position. Fear. If batsmen are afraid of certain bowlers, then batsmen will automatically start inducing mistakes in their batting. Fear freezes you into inaction and leads to negative outcome. Greed. Greed is the fear of missing profitable opportunities. It is the emotional trigger behind impulsive and reckless overtrading. Hope and wishful thinking. Hope, wishful thinking, and prayers are the trading mantra of the unprepared trader. It's no different from a children praying to God to help them to get a higher score in their exam, well knowing that they haven't studied enough. Trading depression. Trading depression occurs when traders go through a loss. They have become disappointed, demotivated, and self-critical. Book also explains common mistakes made by traders which stop them from being successful. First, trying to predict the market's next move. One of the biggest mistakes a trader can make is to believe that he or she can predict what would happen next in the market. Such a prediction is usually nothing but what the trader wishes the market to do. Taking trade as a representation of yourself. Sometimes when traders make loss, they tend to take it as a verdict of themselves as a people. This is a wrong attitude to have because it should be assumed that at least 2 to 3 trades out of 10 wouldn't work. Not existing losing trades. Often a person in a bad relationship refuses to end it in a vain attempt to save it. The same applies to losing trades. Sometimes traders may get attached to their trades and hold on to it even when they see it failing. In other words, don't marry your trades. Revenge trading. Often traders try and get back at the market for a loss that they might have had. In doing so, they are trying to fight the market. This is a wrong, even childish attitude to have. The market does not intentionally give you a profit or a loss. So revenge trading will not benefit you. In fact, it may even increase your losses because now your ego too is involved. Next, not testing your trading system. If your system is not well tested, you are stripped of your conviction and belief in your methodology. And if you don't have conviction, you don't have direction, which makes your trading haphazard. Not keeping a trade journal. In order to learn from your mistakes and keep track of your progress, it is important to keep a trade journal. As you go along and review the journal, it will give you a better perspective of both your good moves and mistakes and make you far more organized. Lack of preparation. All the issues we have discussed amount to either an overall lack of preparation or are issues of temperament. Lack of preparation here means not analyzing the market properly before trading session. If a cricket team doesn't know how much about the strength and weakness of the team they are playing against and what sort of pitch they would be playing on, physical training won't help them much. I guess that's it. Conclusion. As mentioned at the beginning of this video, the book explains technical concepts with various examples which renders it easy to understand and implement. But all these concepts can be available and learned for free. Let me repeat, for free from Google or from YouTube videos. The book also has chapters covering money management strategies or rules, traders' mindset, emotions to be overcome to become a better trader, common mistakes made by trader, qualities of a good trader, and how to think when trading, and so on. All these topics are explained beautifully and would help to improve your trading psychology. Finally, even when the book name is How to Make Money Trading with Charts, still I won't recommend buying the book to learn to trade as it is available for free over Google and YouTube. However, every penny spent would be worthwhile if you buy the book for topics related to money management and trading psychology. So decide your goal and act accordingly. If you want to read the book, can I request you to buy it through my Amazon affiliate link? I'll get a small kickback if you purchase it from that link. I'll put the link in the description for quick navigation if you are interested. Leave a comment below on what you did or didn't find interesting in this video. Is there a book out that you would like me to review? Please share in the comments section so I can put it on my list. If you found this helpful, please like this video and subscribe to my channel. As always, thank you so much for watching and hopefully I would see you in the next video. Happy trading!